What up, outliers? We are back in the studio. That's really just an office. It's not a studio. Let's not church this up. It's just a standing desk. But we're back, and I'm stoked. We have a lot to look at today. I want to go through the market with you all, take a look at some options, see what's going on out there. I do want to highlight this new addition to the art collection. This is a piece of scrimshaw. It's like 2,000-year-old walrus tusk that they chisel into. If you guys are interested, I can show you a close-up of it. Super, super cool. But that goes pretty well with the old mammoth tusk. So apparently your boy just likes old stuff, because that is slowly what is being accumulated behind me. All right, let's get into it. First, I will share another piece of the trip. This was a helicopter tour I booked for us of Bear Glacier that actually included a landing. This was a private tour, which is pretty cool. We had a chance to go check out the glaciers in a different kind of way. So I'll let this play for you. It's like 15 seconds. So essentially, we do some laps around up on the glacier here, and then you can actually see where the glacier is feeding into this lake. I've learned that it's called calving, where the glacier breaks off and falls in to make those big ice cubes. I got a bunch of pictures of those and drone footage down there. That's really, really cool. And then we ended up flying down this way, and then we've landed the helicopter somewhere over here, kind of on the bank. I had a chance to fly the drone a little bit, check out the glaciers a little closer. Overall, fantastic experience. I show you guys this stuff because for me, this is literally all powered through trading. None of this was even on my radar for the vast majority of my life. And the funny thing about this helicopter tour is we didn't even really book it ahead of time. We were just figuring out what we were going to do that day based on some last minute change of plans. And we're like, this looks cool. And the ability to just go book this because it looked cool is something I never would have expected. And I think it's really cool. So while I actually think I probably spend more time beating you over the head with the difficulties of trading, this is the cool part. And this is what I try to remind people, is that for me, trading is interesting. The markets are interesting. However, the real enjoyment, again, for me, is outside of markets, when I can withdraw my money and go do stuff like that with it, which is really neat. So I like sharing that with you all to kind of balance out the doom and gloom side of things, because I am quite a bit of a realist and trading is hard work. But there are really cool benefits to it once it's figured out. So that's that. All right. Now, for those interested, when I get the drone video all put up, I can share a Google Drive link for those that want to check that out. I did one for Iceland, which was really, really fun. I don't think I posted the Norway one, which is also really cool. Maybe I'll get that up for you guys if you're interested. But the drone stuff is just kind of neat. It's a cool way to experience the area and in a slightly different way. All right, so what's going on this week? Let's start with some general outlook information, so that you all have an idea of what to expect. We'll go to the events, and let's get this set up to this week and take a look through. I haven't looked at this yet, so I am getting caught up real time with you all. This will be a chance for us to see kind of what's going on together. So when I look at the 12th, I see OPEC, I see inflation expectations, which that metric I am interested in. And here we go. This is really where things are going to start getting spicy, is this block here on the 13th and the 14th. PPI, CPI, month over month, year over year. It feels like these metrics just keep on coming out, but they do. And they're super important. Right now, the market is at, in my opinion, such a delicate balance. The fact that when we take a look at, let's go into the flexible grid, let's take a look at this. The fact that when I look at this, and I see how the market sold off in here, is extremely telling to me, extremely telling to me. I'm zooming it into 3 months and switching over to the regular indices, so it's not blocked out by noise, although the FUTs are up just a little bit right now, with VIX down about 1.74%. So I'm coming down a little bit. Bitcoin's down 2.75%, pretty significant actually. So anyways, sidetrack aside, This is interesting to me. The fact that the market sold off this heavy and then had this kind of rebound. So let's talk about that. When I see the market get to these nosebleed levels, I expect to sell off sooner or later, just normalization of price, taking profits, like all of that is so normal. Then the market needs to fall enough to get to a point where people are interested in transacting again, buying. And that started happening here. You can see this volume node is really, really deep, actually. And then it fell off a cliff. This downside move was pretty severe. And this was driven by a bunch of different things. The Bank of Japan, they had that unexpected rate hike, not cut, wrong way. And those kinds of things really start to shake things up against the broader perspective of what's going on the US side of things, which is we're still in an inflationary period. Inflation is still elevated. We still have high rates. We still haven't seen a cut. And things are starting to show cracks. We're seeing unemployment numbers coming in, not in line with expectations. We're seeing different economic efficiency indicators and just overall production indicators not coming in line with expectations, really causing people to take pause and say, okay, this actually looks kind of not good. Now, we finish this sell-off. We get a low of 510 after literally 2 days before we're hanging around like 550. And then it starts rallying all the way back up to 532. And this is looking at SPY. So why am I going into all this preamble? It's because I think this is showing you how delicate the market is and just how much this kind of information can have an outsized impact on what the price looks like in the short term. And I emphasize that short term component because I am generally a perma bull. And I think in the long run, the US economy is going to continue to grow, expand, innovate. And I'm just very bullish on the American economy until I see evidence that leads me otherwise. But up until this point, even during the darkest of times, we've seen the US economy pull through. So I do believe it's extremely resilient. That doesn't mean in the short term, it can't look pretty nasty. And I think that that's quite likely. The reason why I think that's quite likely is we have to also take a look at the divergence now between SPY and the Russell, meaning small cap stocks. Take a look at small cap stocks here. They recovered as well, but this small cap move does not look like what you see over here in the large caps. And that's an important note. So to me, it still looks like small caps are under a bit of pressure. They essentially gave up everything they gave us. This was actually a really interesting series of trades for me because I played the majority of this run up via ratio call diagonals, and I got chopped up in here. I got stopped out a few times, tried to re-enter, got stopped out because I thought we were getting closer to the ultimate move that I expect occurring, and then it did not occur just yet, at least. And well, I guess it kind of did, and then it undid itself, I should say, because this is a massive move. This is one of the largest moves the Russell has seen in this reference time frame, but then it gave it all up. And if you take a look, essentially it fell pre-up move levels. So I still view small caps as kind of the canary in the coal mine. And if we can't see small caps in a healthy place operating well, that tells me a lot about the broader economy. Now, notice if you recall during some of the update videos I did while I was on my trip, I was really keying in on how these different days mirrored one another across the indices. They look so similar, right? So if we look at the 5th, if you look at SPY, Qs, or IWM, it looks so similar in terms of the price performance. Then if you look at this, the 6th, very similar, 7th, so on, 8th, so on, and then the 9th. What happens on the 9th? Divergence. We see S&P Qs move in line, very similar. We see Russell turn tail, start rotating over when everything else is going up. So I key into that stuff pretty carefully because in my opinion, we're at a point in the market where you really have to pay attention because it is so easy to get caught off sides in this kind of market because of how visceral it's moving. And when I'm talking about these kinds of moves, the fact that over a series of relatively known goods, right? There was not a bunch of shocks that came out here, but it is starting to flag the conversation of recession. And again, I'm not here to try and scare people or make people feel good. I try to look at things objectively. And it's very clear to me, at least, that we are not out of the woods yet, that the probability of a recession, in my opinion, is actually expanding the longer that this goes as it is. And we see that starting to come into light here, where if we take a look at the Fed watch tool and we take a look, let's look at the comparison, and we take a look at 18 SEP. Notice we're at 100% probability of an ease. That's already a change from a month ago where there was a 7% probability of no change. Not massive, but still enough that it's worth noting. This is really what's different. The probability of a larger cut is expanding pretty meaningfully. Now, this just waffled back. This was a much weighted probability of a 50 basis point cut. Now it's looking like a quarter point, which again, it's just kind of interesting to see with where we're at now and how this is starting to line up. I think most people are of the opinion that the Fed is late and it's really easy to cast stones and throw at the Fed. But when I'm looking at the bond markets, I'm looking at just the way that the market is doing. I'm looking at earnings, which is highly, highly informative. And you'll notice that from the newsletter this past weekend, literally today, if you'll notice in the newsletter, there's really strong performance on a relative basis for S&P 500 companies, big companies. They're doing okay, and they tend to do okay in these kinds of markets. But again, this is why it's so important to have a slightly diversified view of markets and include things that also flash us some different perspectives, aka the Russell really helps with that quite a lot. So if we take a look at Russell year to date, I mean, we're essentially hanging right around. We're like within 5-6 points of where we opened on the year, which is crazy. It essentially hasn't moved. So all of this is to summarize. I think we are at a capitulation point. I think that the market is going to be heavily, heavily sensitive to information coming out like this, PPI, CPI, month over month, year over year. I think those data points are really, really important. I also think jobless claims, really big deal. Retail sales, really, really big deal. All of these standard inflation/economy metrics that we've been using as a proxy are now, I think, under a microscope. Because again, I direct you to this kind of movement. We are at a point where this thing can move pretty meaningfully in either direction. Now, one thing I will say is I don't necessarily see this same downside profile from here. The main reason is because we've already had a decent sized sell-off from being up at 565 now down to 530 in the S&P 500, specifically in SPY. So this drop can be a little more aggressive when you're at what I would call nosebleeds highs, like really, really high on a relative basis, near-term highs. But you can see that we're falling into these value areas where people really were stepping in to buy. So if I move my head out of your way and you look at this giant down day here, look at the buyers that stepped in. We had massive, massive overall volume show up here, which was people just saying, okay, yeah, sell off, got it, but I really like this here long term. That's mostly the positioning that you see there. This is not retail traders. I mean, of course, retail traders are mixed into this, but retail traders are not moving our volume from an average of 57.6 million shares a day to 146 million shares per day. That is institutions stepping in big time. So they're kind of showing their hands a little bit. Now, does this mean that I think that we're parabolic up from here? Probably not unless we get really good information. And I think it is going to be news dependent at this point. I don't think that this is just kind of standard good earnings, stock market moves up. I think we are now heavily dependent on these other metrics. So a lot of general ancillary background information based on how I'm viewing the market I wanted to share with you all, because I do think that there's a lot going on right now. And I think it's really important for us to have a pretty good sense of what's happening, how to position in light of this. I'm going to go over this really far in detail later today with the Outlier Pro members, because I need to position my portfolio. I'm just getting back from my trip. I need to get risk back out there working, but I'm not necessarily, jumping out to throw a bunch of money in the market here. I really need to get into the weeds on where my capital is going to be used. And I need to get really specific because I'm at a great point on the year. I'm well ahead of my annual benchmark, but the other part of trading is not giving your gains up, which I made a video not too long ago talking about some really prolific traders that were able to make literally hundreds of millions of dollars, but they weren't able to keep it. That's the other part of trading, is not just making the money, it's keeping the money. And both are difficult in the process. So that's that. Now, let's take a quick look at upcoming earnings because there are still things coming out. We are definitely tail half of this. So we have like 15-ish% of S&P 500 companies left to go. This is not limited to S&P 500 companies, by the way. This is looking at things with weekly options. That's my general screener. And we have a bunch of names coming up. Friday, super quiet with absolutely nothing that interests me. But on Monday, we have a few things that you can look at. RILY, SPWR. Those are typically okay. It's difficult to trade them, but I don't dislike those. I do like HD. I do like HUT. I do like NU. I like SE. Now, these are not like in terms of the company to the upside. It's just I like trading earnings in here. I'll have to get a little more specific by looking at them and at their individual profiles to see, what they look like to me. But these are the names at least that I'm shortlisting to look at. CAH, WKHS, ASTS, Cisco, Stone, all of those essentially are on play. BABA, John Deere for sure. JD, no problem. Walmart, Amat for sure. So yeah, there's a handful of names in here that still look really, really interesting to me, but I'm not at the point where I'm going to be forcing anything. What I can say is that a lot of the previous names I've been trading, this has been a really productive earnings cycle that's been really kind of more in line with general expectations. We went through a couple quarters not too long ago where it just seemed like everything I was trading was going way off into this new unfounded territory, but it seems like we're getting back into standardized profiles. So that's what earnings are looking like to me coming up this week. Now, I did get a couple questions about a few other names. One of them was a question about, let me grab it specifically. We were looking at SoFi. So let's take a look at SoFi quickly. This is for Oscar from the Discord. And he's asking about a ratio call diagonal, which this is a no-go for me. It's literally as simple as it's going down. So yeah, I mean, there's essentially absolutely no other work required for me here. Like, it's in a downtrend. Again, does that mean that it can't go up? Does that mean that this down move was overdone and it can't go up from 664 to 73? No, it can. But one, that's a tiny move that I'm not interested in. And two, again, it just has the broader wind in its face, not at its back. Like, this does not look very interesting to me to the upside. Again, totally can go up. I wouldn't surprise me if we saw some sort of return to value up towards this point of control, to be completely honest. But the other assessment I have to make is based on this movement, it looks like it's building a floor in somewhere around here, like 628, 63-ish. So the downside is generally limited, but the upside target that I would have would be somewhere right around this point of control, which essentially going from 664 to 730 is just not an interesting move to me. I would want to see something that offers more movement than that. So yeah, I don't like it for a ratio call diagonal personally. That would be a absolute pass. The other question we got from the Discord is from Wrath asking about the VIX. And they're asking, a lot of volatility has been pulled out of the market with no new money flow coming in. Could that suggest that we're starting to lean more bearish? Sort of. It absolutely could. But I mean, the VIX itself is also coming down, right? The VIX is not at this crazy high elevated level anymore. It's kind of at what I consider to be a generally sad level for where I would love to see it. We zoom this out, let's do like a 5-year daily. I mean, even at this generally elevated level in terms of this recent time frame, which has been obscenely low, it's really not that high. So I'm not sure that I think much about actually that money flow argument. I, again, would argue kind of the opposite. So if we go back to SPY, take a look at the volume on this day. Again, this is that day I was showing you where it had massive, massive overall volume, 146 million volume. And I'm highlighting the tip of that volume node for you guys in this little tiny graph here, looking back 5 years. This was higher volume with 51% of that volume being buy volume. And you don't really see that volume until you get back over here, which was another dip that was heavily bought. So I'm not really convinced on the money flow thing. It really, if you're using like a money flow index, depending on what kind of oscillator you use, it's going to look at this differently. But I'm just looking at the gross movement of shares, and there was a lot that were bought here. So yeah, there's that to me. I don't actually think that we have a bunch of money rotating out. It does look like there's profit taking. There was money rotating out here, no doubt about it. But then we had some serious buying going on. We had serious buying going on the 8th and also on the 9th. So on the 8th, it was 93% buy volume, and on the 9th, it was 74% buy volume. And still on the 8th, it was above the 20-day average for volume. So yeah, I mean, overall, still really aggressive positioning. The other question we got is about our fan favorite GameStop. And the main reason why I want to look at this is because we are coming up at least on the next exciting week, which is an expiration week. It's 16 Aug. I was talking with Newton a little bit. I actually need to chat with him a little bit more. He's not feeling well, so make sure you send your wishes that he feels better. Feel better, my boy. But I do want to understand a little bit based on his assessments of this next cycle, what he thought was going to happen, because I think he felt that the 8th was supposed to be a pretty big day. I have to be honest, I haven't caught up on his videos. Maybe he talked about this already, but I mean, there was a move to his credit. It just isn't really much. And I think there's a lot going on here. GameStop still is part of small caps, which are not doing really that great. They're, well, small mid cap, but they're just in a tough spot, I would argue. And the broad market is not offering this a massive back/tailwind. Now, it does look like we're starting to create a little bit of a new base here, which is really good to see. You can see where I was originally expecting it to go. Like I talked about before, people were actually really upset at me that I even talked about it going to like 18, which I'm just looking at it as objectively as I can. I know people love the company. I know people want it to go up. I want it to go up. I have shares in it, but I still do my best to look at things objectively, regardless of what I want it to do or not, and just look at what it might be likely to do. And again, not exactly to where I thought it was going to go. Here, it hit a low of 1873. So I was about $1 off. But this made sense to me because we came down into another value area that people became interested. But here's one of the problems I'm finding is this. I'll get myself out of the way. And you can see that volume is just anemic. Volume is so light. It's so low, even relative to its 20-day average. 20-day average is about 12 million shares. And what you're seeing is half of that on most of these days, or even less. So volume is pretty light. And I think that's an important note because it's just kind of like a slow period for the stock as I see it. Now, it does have oscillators starting to come online. So the CCI is starting to turn positive. Again, I'll get myself out of your way, but it's still not where I would consider to be in buy territory just yet to the upside. But this is something that if it continues to hold, it becomes more appealing for me from an options perspective, but it's just not doing what I would need it to do. So I'm looking at 640,000 calls against 334,000 puts. So still call skew, still a little bit lighter than what it typically would be for a really bullish configuration, but this is still noteworthy. I don't want to diminish the fact that it's almost 2-to-1 here. That's pretty meaningful. But when we see GameStop in like a really bullish configuration, it'd be like really, really high. So I'm not necessarily seeing that. Now, when I look at this coming expiration cycle, we do have a pretty stacked options chain. Now, the 24.5s are really light, but other than that, I mean, we have 6,000, 6,000, 4,000, 23,000, and then it gets light out here to the 30s. Does this look like a giant gamma ramp to me? Honestly, no. It would probably need quite a bit more density here, but it could be if there is a lot more activity, but it just seems like it'd probably be fairly quiet as far as I can tell. Now, the other thing I wanted to touch on quickly was Chewy. I had a couple questions on this. And one thing I did look up is for the 13G that Roaring Kitty filed. If he wanted to trade, if we, are postulating whether he's in or out, he would have to file an amendment to the 13G if his position fell below the reporting threshold. So we know, at least up until now, that the position is still on to some degree. And we still don't fully know if he's using options or shares. It seems like shares is my best guess, but we just can generally postulate that he's still in it. Now, whenever the transaction happens, I think there's a 10-day window or so. You guys probably know that a little better than me. I don't want to give you bad information. That's what I think it is, about a 10-day window from the day that the change happens. So it could have happened 8 days ago, and then we wouldn't know until the filing if he waited the full 10-day period in order to file it. But it does look like he's still there. The reason why that matters is because there is a reality where Roaring Kitty is a catalyst. It's crazy to say that an individual trader is a catalyst, but he is. And what he does in GameStop does serve as a catalyst for movement. I still don't necessarily think that he's pivoted away. It doesn't seem like he's turned his back on the stock at all. My guess is he's just kind of exploring the space. He's looking around the dance floor and he's playing things as he sees it. But it seems like, based on all of his social media history and everything that he's done previously, it doesn't seem like he's fully pivoted. At least I wouldn't think that to be the case until I saw something definitive, meaning something directly from him. But until then, to me, it just looks like he's kind of playing opportunities as he can find it, which makes, again, from a trading perspective, it makes a lot of sense. And it looks like he's trying to play a lot of structural behavior. There was some interesting call activity that we reviewed already in Chewy. And what that means for Chewy, we don't know yet. But to me, it looks like it's starting to run right up against near-term resistance, which would be right about there. And the reason why I say that is because it's right on this next volume node. The next resistance would be down a little bit further. It would be like right here off of this volume node there. So it's 24 handle. Looks like the next general area of congestion that it's going to be bumping up into. So we'll see how it runs from there. But this is kind of in a different configuration, right? It's above the point of control. It still has volume coming in. That's generally long volume. So if we look at the 8th, it was 99% buy volume. That's a lot of buy volume, which is generally interesting to me. When we look at the options chain, I see 256,000 calls against 184,000 puts. So way, way less variance between call put OI. And their calls are kind of all over the place, right? You can tell by all these different colors, which represent these different expirations. It's kind of a mixed bag as far as I see it. So we're going to keep an eye on it. The other thing to note, though, is that earnings is coming up. And that was my best guess for that trade that I saw in Chewy, because it was right after earnings, if I'm not mistaken. So to me, it makes total sense if you want to trade earnings in Chewy to build a position that essentially expires right after it. It's on the 28th. And it's before the market. So you can gain exposure right around this earnings release. And that seems to be what that position was, but we'll find out soon enough. So quick kickoff to the start of the week. We have a bunch of stuff to look at. All of the live streams are back online. I'm going to keep up with Newton to see if we're going to do the GME live stream on Saturday. If we are not, I might shift it again to Thursday and just do another solo one where I kind of flounder around by myself with the help of you all to help me figure out what I should be looking at and continue learning. But yeah, I'm still talking with Newton. We'll figure out when we're going to connect again. Hopefully he feels better. But if you guys need anything, as always, let me know. Be an outlier. See you guys later.